Leaves are falling and temperatures are dropping, but REIT returns remain as hot as the summer sun. Through the first 9 months of 2010, the FTSE Nareit All REIT Index was up nearly 19%. This compares to less than 4% total return for the S&P 500. Here to look at the reasons why is Nareit Vice President of Research and Industry Information, Brad Case. So Brad, what's driving REIT returns?
Well, I think it's a combination of factors. First of all, it's important for investors to recognize that it's not just the first 3 quarters of this year that have seen strong REIT returns. REIT returns have really been stronger than the broad stock market over the entire history of data available going back to the beginning of 1972. In fact, over the last 10 years, if investors had put $100 into the stock market, so the S&P 500, 10 years ago, that $100 would be worth only $96 today. If instead they had put it into REITs, that investment of $100 would be worth $268 today. So it's really a very dramatic difference in returns that investors have seen for a very long time. As far as the forces that are driving it, I think one of the forces that we've seen recently that we hadn't seen several months ago is really a sense among investors that fundamentals may finally be starting to improve in the broader economy. The economy still has a lot of softness. And investors are concerned about employment growth going forward, but I think they're starting to see signs that fundamentals may start to improve sooner rather than later.
Speaking of fundamentals, I was looking at the Nareit numbers, and what really stood out to me was the fact that apartment REITs are up about 33% for the year. Is that a story of, like you mentioned, investors seeing fundamental returns? And how does the potential reform of Fannie and Freddie impact that?
Yeah, I think it really is a story of improving fundamentals. You know, in the housing market, we went through a period where there was a real bias toward buying houses, and households now are really nervous about the future of house prices, and so they're in no hurry to buy houses, and that increases demand for rental housing. That affects the operating fundamentals of apartment REITs. So I think that's largely what's going on in the apartment REIT sector. As far as the role of Freddie Mac and Fannie Mae, they certainly are important in the financing of apartment buildings. But I don't think investors are really responding strongly to them. Really, the earnings that investors will get through investments in apartment REITs are going to be much more strongly affected by the underlying fundamentals.
I remember a cover story a couple years ago in Nareit's magazine that titled "Dividends Are King." Obviously, REITs are a very strong play for yield investors. How have REITs lived up to that billing this year, and what's the outlook going forward?
Yeah, it's actually a very strong part of the REIT investment story. You know, as investors know, yields right now across the board are very low. REIT yields have been stronger than they are now, but they're still at 3.8% for equity REITs, and in fact, mortgage REITs are offering dividend yields of almost 14%. So very strong dividend yields in the REIT industry. And in fact, even for the lower part of the REIT industry, which is equity REITs at 3.8%, that's still much stronger than investors can get in essentially any other income-producing investment.
Brad, thank you very much. It's certainly been an impressive bounty for REIT investors so far in 2010. We'll be watching to see if investor optimism over fundamentals continues to strengthen in the latter part of the year. For REIT.com, I'm Matt Bishar.